Brings you Wall Street's best traders, analysts, and technicians to give you a 360-degree perspective on markets. We focus on the hottest stocks driving market headlines and spotlight disruptive companies and new technologies exciting today's investors. Watch Trading 360 with Nicole Petalides weekdays at 11 a.m. Eastern on the TD Ameritrade Network.
Opportunities can be hard to find.
Welcome back to Next Gen Investing. I'm Jenny Horn, today joined by Sean Cruz, filling in for Alex Coffey, and we are talking Orcl. Now, this is our Fomo segment, and it's important to just sort of disclose this is not an endorsement of the stock. Fomo is really just focused on making sure, we discuss some of the biggest movers of the day and also stocks that see a ton of volume, as we're seeing actually Orcl today being one of the top traded stocks in the S&P 500. So that makes it sort of an ideal candidate for FOMO as we discuss the idea of missing out when there's a lot of emotions involved in trading. And I mean, it's very difficult, I think, to decipher the two, but we sort of aim to, make a trade based off removing some of that emotion. But Orcl today is an interesting name. I think that they really hit their earnings out of the park. This is a stock that's up almost 130% year to date, up 12.5% in the last 2 weeks and 16% this week alone, following really just a very strong second quarter report. I really don't know what they could have done any better. They snapped their 2-day losing streak to gain today. Now they're on pace for their biggest daily gain since March of last year after reporting better than expected earnings and sales and increasing their share buyback by $10 billion while also declaring a quarterly dividend. I mean, it really doesn't get much better than that, Sean.
Yeah, and I think the concern was, are they sort of going the way of the dinosaur, the fax machine?
Right.
No one needs these big physical Oracle hardware in their business. They're all going to the cloud or whatever that might be, data centers. And the question was, can you actually come in here in a highly competitive arena where you have some pretty big companies with deep pockets and even some startup companies that have a lot of backing behind them and compete? That was the question. Amazon Web Services, Microsoft Azure, Google Cloud. There's a lot of players out there in the space. And everyone was saying, if I want cloud exposure, do I really need to go into Oracle? Are they going to be able to really make a move into this segment and be competitive? And so when you start to sort of write off a segment that is a high growth segment, not just for Oracle, but if you look across cloud computing in general, that is something that has been growing quite a bit for the past years and expected to grow even more in the years to come. So I think it's one of those things where everyone realizes, oh, you know what? If I want some exposure to cloud and I want to diversify away from just Amazon Web Services or Microsoft, whatever that might be, I can actually look at Oracle, and they have a sort of their foot on both sides of the fence here, where they still have a hardware business, and they're complementing that with their cloud and software services as well.
That's exactly why I think we saw such a positive reaction today. The CEO highlighting that their results were driven by this 22% growth of their infrastructure and applications cloud businesses, which are now approaching about $11 billion in annualized revenue, which signals really this strong progress this company is moving from being what I consider this clunky, old school software company into a new age cloud company, which is exactly what analysts love to see. I mean, just a few analysts that raised their price targets today: Piper Sandler, Deutsche Bank, Wolfe Research, Credit Suisse, Oppenheimer, Citi, Barclays. I mean, the analyst praise just went on. And actually, a lot of them just said that they just thought that they came out with reports that showed growth finally. The analysts, if you read a lot of the reports, actually weren't as excited as I thought they'd be given the stock's reaction, but all raised their price targets nonetheless.
Yeah, and it's interesting how analysts look at valuation in different parts of the business. If it's a more mature part of your business, they want to see profitability. They want to see it kicking off cash flow. If it's a business you're moving into, they won't put as much weight on profitability. They're going to look at just revenue growth, subscriber growth, how many new customers are you bringing on. By Orcl going out there declaring the dividend, you don't typically see companies declare a dividend if they're at all uncertain about their future outlook to be able to pay that out. And they definitely don't go out and start ratcheting up share buybacks if they don't feel pretty good about their ability to have that cash to actually go out and make those share purchases. So it was a earnings that beat expectations, and you saw management really kind of double down on it with the dividend and the share buyback.
Yeah, and I think that's a really good point, as we saw so many companies during the pandemic, in times of really heightened uncertainty, actually suspend their buyback programs or suspend their dividends. So this is definitely a sign of a healthy company. And I just will be curious to see moving forward if they can continue to compete with an AWS, a Microsoft, because I think they've proven they can grow on pace with expectations, but it's just a matter of continuing that growth. Like we sort of discussed with Peloton, can you continue to meet these lofty expectations?
Yeah. And so I think if you're looking at this and you're seeing the stock move, you're seeing analysts come out and raise their price targets. I saw a handful of analysts somewhere wrapped around that 110 price level. And if you're asking yourself, do I need to come in here and buy shares to be able to participate, or if I really think it's going to rise up to that level, what you can do is you can still put on, buying calls is one popular way to get upside exposure, but you're paying out that premium. What you can do is, once again, give yourself some time for that stock to maybe rise up and meet the valuations, assuming the analysts are pretty accurate. So you can go out and buy a call, a month or two out, give yourself a little bit of room there. You can even go out to March, so you're giving yourself well into the first quarter, and to finance buying that call, you can sell a similarly priced call. So your optimal price point or your optimal price level in this trade would be somewhere around that $110 price level, which is up around where a lot of analysts are looking at. And once again, if the stock goes higher, this trade presumably would also perform somewhat well, although because it's a calendar, you never really know how the rolls and how things can play out on that the curve for the options. It's not certain, but this is a trade where you're looking at a price level you're targeting at the upside.
And something to note, you mentioned you're going out to March here, so a longer term trade than we usually put on, but neutral to bullish. And I mean, just an interesting name in Orcl. Again, I just sort of put them, as in this group of companies that was just an old school company, but they've, I guess, proven me wrong today, and good for them, up significantly following this earnings report. But that does it for our FOMO segment today, Sean. Now, coming up next, we will talk our under 30 name today. That is Sprinkler, ticker symbol CXM.